find it difficult to survive, and the losses in the industry have been really high, and they are expected to only continue with sugar prices at close to 26 rupees right now.
I'm going to now hand it across to my colleague Varinder Bansal, who had broken the story. He's got more detail and is joining us with his perspective on this deal. Varinder.
Well, Nayantara, first of all, let me revise the deal for you, and I think for all of our viewers and Mr. Tulsi and Manikam and everyone there, I have a lot of clarity on the deal right now. The total investment is nearly $200 million into Shree Renuka Sugars. Now, this is divided into two parts, which is very important to understand. The first step is via preferential allotment, which we've been telling you since morning. This will be nearly 517 crores out of the $200 million, what I said. And this will be preferential allotment of nearly 25.75 crore shares, and it will be done at a price of 20.08 per share. After this, the existing promoters and Wilmar would hold nearly 27.5% equity each in the company. This will of course trigger an open offer, and which will be 26% of the expended equity. The open offer price is 21 rupees 89 paisa. So just to wrap things up once again, the preferential allotment is done at 20 rupees 08 per share, and the open offer price is 21 rupees 89 paisa. The first step, as I said, will be preferential allotment, and the second step is the rights issue, which will be, which will of course have a provision of Shree Renuka Sugar promoters and Wilmar participating into it. And the rights issue, the size is nearly 725 crores. So I'm broadly breaking up that 1200 odd crore deal size into two components. The first one, as I said, will be preferential allotment done at nearly 20 rupees, and the second one is the rights issue, which will be done at 725 crore, around 725 crore. The total amount which will be garnered by Shree Renuka Sugars will of course go on to reduce the debt of the company. I want to get a quick reaction of Mr. Tulsian here, because as we understand, the one is the preferential allotment and the second is the rights issue. Mr. Tulsian, now we understand this entire deal of $200 million. What is your initial reaction on this, considering that there will be a preferential allotment, open offer, and a right issue which will be coming up in the next. And of course, the pricing is very important, because I've been listening to you earlier. You have mentioned that the pricing could be anywhere between 35 to 40 rupees, but the preferential price is 20 rupees, and the open offer price is 21 rupees 90 paisa something.
See, Varinder, going by the whole deal, I think the preferential issue at 20 rupees 8 paisa is highly undervalued. I am grossly dissatisfied with deal. I don't understand the logic of giving at 20 rupees. Let's not talk of 20 rupees 8 paisa for sake of simplicity, issuing the shares at 20. Now the open offer will come at 21.89 per share. Even that is seen really quite low, because I don't think that if you take the enterprise value for the entire company, which works out at about 11 to 12,000 crore, this deal will really be seen prejudicial to the interest of the company and for the minority shareholder. Now third point, the press release says rights issue to be subscribed by Wilmar and the existing promoter, that is Murkumbi, of 725.4 crore. I don't understand how the rights issue can only get subscribed by the promoters, because when we are talking of rights issue, that will be given to the minority shareholder or to the non-promoter shareholders as well. So that itself has the confusion.
So, Mr.
But if I presume that 725...
Mr. Tulsian, I think everyone will be participating. I think this also states, Mr. Tulsian, just clarity on this. I think the statement clearly says that the second step would involve Wilmar and existing promoters of SRS jointly participating in the right issue, and of course this will be open for the public shareholders as well.
Come in to put one question.
Coming on that, that's what I'm
just going to come in to put one question to Mr. Tulsian and all of you as well.
I can just...
Mr. Tulsian, I think the additional question you might want to look at is also the fact that not only before you get to the rights issue, the fact that they've said in the first half of the press release that both parties holding equal shareholding and board representation in Shree Renuka Sugars. Then they go on to say that Wilmar will buy 27.5% or will acquire through that preferential allotment 27.5%. Then it will do an open offer. Assuming that it may not, I don't know what response it will get in the open offer at this price, but how will this pan out to being an equal shareholding of both? The current promoter shareholding is somewhere between 38 to 40%, right, sir?
See, Menka, I was coming on those points only, one by one, because if you really go by the present promoter holding of 38.36%, in fact, I was coming on that point only, the third point which I mentioned of the rights issue, which I presume that it will be open to the non-promoter shareholders also, logically so. So in that case, the equity dilution, the expanded equity will rise to about 130 crore. That means there will be 100% dilution from the present equity of about 67 crore. It will rise to about 130 crore. And now coming on the last point, when the Wilmar will be acquiring 25% stake in the company or 27.5% stake in the company, and if you add the 26% open offer, I presume that to go successful, that means all of them will participate. Then how both the promoters will be having the equal shareholding?
Yeah, I think that's my question as well, Mr. Tulsian. That's a little confounding as well.
Yes, I was that's you have preempted my points which I wanted to narrate. Those 4 points which I have said, but I am grossly dissatisfied. I don't think that there is any kind of logic for giving this kind of valuations. If you are giving 20 rupees valuation per share for Renuka, I don't think that all other sugar stocks really deserves to rule at those valuations. They all should come down at least by 50%, because I can give you the whole capacity, 42,000 ton per day of crushing, 930 kiloliter per day, 271 megawatt of cogeneration, 2 refinery in Haldia and Kandla. If you really see their other assets, they have been owning 2.5 lakh acre of land in Brazil. I'm not saying taking the land value, but see the kind of assets they all are owning. And if you are giving them, even if you take the 1500 crore market cap, take 1500 crore as expanded equity, which in fact logically is going for retirement of debt. So enterprise value doesn't get changed. 6,500 crore debt, the present market cap of 1,500 crore. That means you are taking the enterprise valuation of the company at 8,000 crore, which is pathetic. I would say that very low, very poor. I think that this 20 rupees, I don't know what wise counsel has prevailed upon the investment bankers or maybe the management, how they have become so generous to offer the stake to Wilmar at such a low price.
No, these are important questions as Mr. Tulsian has raised them, and I suppose, Varinder, as you talk to management, these are questions to try and understand the structure better in terms of how will they ensure that after the preferential allotment and the open offer, the response to which is unpredictable, though it could be very low at this price, how will the two parties, which is Wilmar and the current existing promoters of Shree Renuka Sugars, maintain equal shareholding and then go on to subscribe in a rights issue, the fortunes of which we have no clue? So eventually, at the end of the preferential allotment, the open offer and the rights issue, how are they hoping to have both parties maintain equal shareholding and board representation? That's the curious question to ask.